All right, they did it. Nvidia announced the 10-for-1 stock split. This was something that investors and analysts were speculating about for some time now, since Nvidia's share price approached $1,000 per share. So I'll cover this announcement, all the details, but I'll go in more deeply. I'll analyze what this means for Nvidia stock investors. Does this mean that the newer investors should buy the stock, or does this mean that newer investors should stay away? What about existing investors? Should they now sell the stock, or should they keep it after the split? So I'll go over all the details about the functionality of a stock split, how it actually works, and then I'll discuss more in detail about Nvidia specifically and what it means for Nvidia stock investors. Let's start with looking at the overall concept of a stock split. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. All right, so what I have here is a hypothetical scenario of a stock split, okay? I'm going to break it down and simplify it as much as possible. I'm going to put my professor cap on and try and explain this in as much detail as possible, so we try and really understand the dynamics of a stock split, what actually happens. So it all starts with net income, okay? So let's start up here. Let's say this hypothetical company has a net income of $10,000, right? The net income, even after a stock split, doesn't change. This is a company level result. Net income stays the same at $10,000. What changes first is the number of shares. So in this scenario, I have the number of shares starting at 1,000, and we're going to do a 10-for-1 split. So every one share becomes 10 shares, so 1,000 becomes 10,000 shares. So as you'll notice, the net income stays the same. Even after the stock split, you still have 10,000 in net income. No change, okay? What changes is the number of shares. That increased to 10,000, okay? So in the first scenario, your earnings per share was $10 because you had 10,000 in net income divided by 1,000 shares. Your earnings per share is 1,000. In the second scenario, your earnings per share is only $1 because you're taking the $10,000 in net income and you're splitting it among 10,000 shares. And so your earnings per share becomes just $1. So just as the number of shares goes 10x, the earnings per share gets divided by 10x, okay? The stock price also gets divided by 10x, where you had a $1,000 stock price, that now becomes $100, okay? So your shareholder earnings in the first scenario, you had one share and you were getting earnings per share of $10. In the second scenario, you now have 10 shares and each share is giving you an earnings per share of $1, so you have shareholder earnings of $10. Your quantity of shares, the number of shares, increases from 1 to 10, but your total earnings, your total shareholder earnings, what you are entitled to as a shareholder, does not change. So the end effect is no change. It's no change, right? And I've been talking about this for several years. I try to discuss this with investors, and they seem to have a hard time grasping this because then they say, well, why is there so much hype surrounding stock splits? Why is stock splits so publicized and why are they so talked about? And the answer is because it makes shares more affordable, because you take the $1,000 share and you divide it and now it becomes $100. So investors previously who only had $100 to invest can now buy Nvidia stock, whereas if it was trading at $1,000 per share, they couldn't buy Nvidia stock. Now, I know there are some platforms that allow fractional share buying, but not all investors have access to platforms that have fractional share buying. And then the counter argument would be, well, if somebody wanted Nvidia stock that badly, what if they just open an account that has fractional share buying and buy Nvidia stock through one of those accounts with fractional shares? The answer is probably some people have done that, but not everyone. So this just makes it more accessible. And there's a lot of misconceptions surrounding stock splits. Not everyone is a finance student. Not everyone is a finance professor like myself or a finance professional like myself. And so there's a lot of misconceptions that lead to a lot of excitement and enthusiasm surrounding stock splits. And I think it's overdone. I think, and I've been saying, if you've been following my channel for the last few years, I've been always trying to bring down expectations and enthusiasm surrounding a stock split. I've been explaining it, several different ways. I tried to bring forth the pizza slice example, right? You still think of the net income as your pizza that you order from the pizza restaurant, right? And think of the number of shares as the number of slices, right? You've got one whole pizza. You could slice and dice it as many different ways as you want, but at the end, you still just got one pizza, okay? So if you take two bigger pieces and slice them up into 4 smaller pieces, are you getting more pizza? No, you're still getting the same amount of pizza. That's the main point I try to emphasize surrounding stock splits. There isn't anything extra created. It's just slicing up what's existing into smaller, more digestible pieces. Now, what does that mean for investors? Well, as I said, no change, okay? No change, still the same amount of pizza. It does offer a broader ownership of stock, so you might get some newer investors who didn't know about all of those details, who didn't know they could buy fractional shares, who didn't have access to fractional shares. They might now buy Nvidia stock, which might give a short-term boost to the price of Nvidia stock. But at the same time that's happening, value-conscious investors, professional, experienced investors will notice the valuation of Nvidia stock increase, and those share prices might increase to a level where they feel like it's time for them to take profits. So they will sell the stock. So the ownership base will broaden, where you may have had one investor, a wealthier investor, own $1,000 share of Nvidia stock. That person might sell the stock, and then you might get 10 new investors who own a $100 share of Nvidia stock. So you broaden out shareholder ownership. Again, no real change there. You're just changing the group of investors that own Nvidia stock. Doesn't really impact the expectations going forward in terms of return on investment. Does it change that? No, it doesn't. It also offers some flexibility in trading options. If you have a lower stock price, options are usually traded in 100 share groups or lots, as they're called. If you have a lower stock price, it changes and increases the flexibility in trading options, which again doesn't really have a major change in terms of the expected future return on investment. Just kind of behind the scenes stuff that might help in the options market and reduce the spreads in the option market, because you have smaller share price and so the spreads between the buy and sell narrows. But again, no real change in terms of return on investment expected. So now I'll get into Nvidia specifically. Okay, so they announced here a 10-for-1 forward stock split of their issued common stock to make shareholder share ownership more accessible to employees and investors. So each holder of a common stock as of the close of market on Thursday, June 6, will receive 9 additional shares to be distributed after the market closed on Friday, June 7. And trading is expected to commence on a split-adjusted basis as of the market open Monday, June 10. So if you're one of those investors in a platform that doesn't have fractional share buying and you want to buy these lower-priced Nvidia shares, you could probably do so after Monday, June 10th. Now, does this make Nvidia stock a buy? Well, I already had Nvidia stock rated as a top 10 growth stock to buy, top 25 stock to buy. I rated Nvidia stock as one of my top stocks to buy around December 30th, December 31st. So I've had this stock rated as a buy all year long and even before that. So I still think the stock is a buy. I don't think those shareholders who already own the stock, I don't think the stock split is a reason to sell it. And then if you don't already own Nvidia stock, I don't think the stock split is the reason to buy it. The company was already a buy. And if the split makes it accessible to you because you have a platform that didn't offer fractional share buying and you now have access to buy it, whereas you didn't before, okay, go ahead and buy it. If you've been wanting to buy it already and now you have access, okay, go ahead. But the announcement of the split and the actual split is no reason to do either. It's no reason to sell and it's no reason to buy. Investors, experienced investors, professional investors, we view this, or I view this, as just a non-event. This is an opportunity for me to make a video and offer my insights into this category to kind of elaborate on what the dynamics are of a stock split. But in terms of my interest in Nvidia stock, buying or selling, or my rating of Nvidia stock, it does not have any change at all to my analysis of Nvidia stock one way or the other. It's just a non-event for me in terms of the desirability of owning Nvidia stock. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.